Good afternoon, traders. Sasha here. We are talking about AirCanada stock today, and today is December 22nd. Quick disclaimer that this is just how I see the markets. This is not a recommendation to buy, sell, or hold any securities. And it's 2:24 in the afternoon. The market is closed. I personally don't like trading very close to Christmas. Markets become very unpredictable. Lots of people are closing their accounts for the year, and the trading becomes really hectic and crazy. So I basically stay on the sidelines. Again, this is not going to be a video about recommending to any of you buying or selling or holding any securities at this point of time. Let's start quickly. We are looking at the 1 week chart. This is a weekly chart. We have two lines drawn right now. If you see a little bit of dotted line right here, that means that that's where the price is at the moment. We'll take a look at that in a second. I have two lines drawn, and the reason why, one is blue, one is red. I always call these areas an area. It's not a specifically price that's set in stone. So the blue one is about 22.54, and the red one is at the moment 21.99. The reason why I have the red one and the blue one, well, let's take a look. Okay, so the blue one represents all these stops of the market in the past. Take a look how the market stops here exactly on the blue line. Look at here. Look at this example. To the dot, right there, right there, right there, right there, right there. You can also see the price stopped at that level with this red candle there. If we take a look at here, this one is also right on a dot here. So that's telling me at that point of time, and also at this point of time, this area was very significant for us to look at before we make any trading decisions. Also, the red line, if we take a look, the red line, it represents, and I'm going to show you why I marked the red line, not because of that much of the past. Also, the price did stop at those levels. You can see it here. The price broke through and then just went back straight back into it. It was a fake out. The recent history shows us that when the COVID sellout started, we had this move here all the way to this level here. Okay. Then we had a first pullback. The bulls got into a trade, and this is where we stopped. This is why I drew this red line. This is the first time we stopped. This is the first top that we made after the bullish move. Second time the market fell, we had a retest of that level. Again, it's not a set in stone price. It's a area where we might poke through or come back or just come to the exact point this way. At this point of time, we poked through it. The bulls were not able to hold the price there, and then market fell and we went down again to $15, which is right here. Okay, $15 became a very important part for us to look at this as far as the support. So we have three bounces, clear bounces at this level, and we also have the boxing that happened at that level as well. Okay, so those are, boxing means that the price is actually undecided and it's basically going sideways. And this is a lot of struggle between the bulls and bears, and these areas should be in your mind at all times when you're trying to trade. After this drop here to $15, we had another pull from the bulls all the way to, I believe it's a $24, almost $24. But anyways, so after 1, 2, 3 bounce at this level, this red line became very important to me to look at. Okay, so red line, basically it means that this is the area that I'm looking at. So this is kind of an area that I'm looking at to be very important for us to trade. Let's switch to daily chart and see what's happening on a daily chart. So this red line represents exactly the same red line that's on the weekly chart. We can see when the market came to that level, we touched it once, twice, 3 times. Look at this, just right to the dot, like right to that red line. Okay, then we finally broke out and then we went all the way to $28, a little bit more than $28. Okay, now the market is in retracement, or it fell down. We were expecting something to happen at $24. Unfortunately, that level did not hold, and market fell even more, which is great. I mean, we're getting a better price to get into the trade. And yesterday, a very important thing happened. We got the first look that where the bulls are going to be holding their ground. This first look came out in the shape of this green, huge engulfing candle. Okay, this candle does not engulf anything because there's nothing before that. You know, this candle was right there, so we just dropped to this level. However, this is a huge engulfing candle that is telling us that the bull power is actually located at this 2207 area. Okay, so $21 to $22, again, it's the area. The size of this candle is telling me a lot. The next day, or which is today, we are getting this inside candle, inside bar, which means the indecision. Again, it is a fight between the bulls and bears. Now, if we look at this top of this candle here, we can see that it stopped exactly on the dot with this red candle here. So this $22 area is very important. After we received this huge engulfing candle, we had bears pushing down the price, trying to push down the price and close below. Okay, this is the first time now in many days that bears were not able to break any lower. They didn't make a lower low. Okay, they didn't break a lower price. Now, what happened today, if I look at just this little pattern, right? We had a bulls. They're showing a very strong move at this point of time. That was yesterday. Today we had bears in control of the market today. They pushed the price below this red line. This red line was representing our significant level here. Okay, they pushed it. So this wick shows that the market was today below this red line. It came all the way down here, but the strength of the bulls at this level is showing again to us, and not in a sense of getting us a green candle. It's showing us that they managed to push the price above that red line and close the price above that red line. Okay, they also managed not to allow bears or sellers to make a new lower low. Nothing went down below this candle. So this is a great information that we are getting from these two candles. Just exactly what we are expecting to happen at those support and resistance areas. And this is how the story is being read. Like, this is how we read the story of the chart, and this is how it's done. So does that mean that the bulls are going to win? No, but it's giving us information that bulls are located at that level, and they're planning to push the price up from $22. This move of the bears trying to push the price below $22 was not successful, and the price was driven above $22. Okay, we are now in between these two lines in this area. Okay, we also have the indecision candle, which is inside bar. It's inside the previous bar. Didn't make a new high, didn't make a new low. What I expect this to do, and this is also a pin bar, so that's one bullish signal, second bullish signal with the rejection of the level. That's what you're looking for. So we are looking for three things, which is a market direction, which is bull market or buying market. We are looking for support and resistance. In this case, it's a support because the price was coming down. Okay, so this is significant, obviously significant support for the bulls. Plus, bulls showed us their hand at this level once, twice. Okay, what needs to happen for this trade to be successful and take the market in the bullish direction again? This top of this green candle has to be broken now. The market has to make a new higher high. It has to break above there in order for us to give us a confirmation to go long. Okay, so that's about it. That's how you read the market. I went into too many details today, but that's exactly how I see it. And this is, if you are a trader, or if you're learning how to trade, you need to be able to spot these kind of things that are happening around you. Okay, so if you are planning to be a trader, you have to know where the market is heading at this point of time. We know that we are in a bullish move. We know that we are in the retracement. The market also comes to a certain point where the people or traders or huge institutions start taking money out of the markets, waiting for a better price to come down to the certain level, and then invest new money into this market. Okay, so that's exactly what it is. So we had a direction, we had a support, which we actually, and I showed you why I marked this red line. It was very important for me to know that it's there. And also we are getting the third thing, which is the signal, and signal is telling us twice now, 2 days in a row, that the market is telling us that it's in the bullish move again. All we need is a confirmation or a breakout, making a new higher high. So we need a candle that's going to break previous candle. This green candle has to break it, okay? And then we are off to go, okay? Is that going to happen? Again, I can't express enough that nothing is certain in the market. You never know what is going to happen. Do I have a crystal ball? I don't. Just having to read the signals at a certain areas and following the price action, right? Price is going in a certain direction. All I need is a confirmation, and confirmation comes in a powerful way of breaking this top. Okay, what else can happen? Well, if the market breaks, let me just clean this. So if we get the candle that does this, all right, and so that means that it went higher than this green candle, we have a bullish move and confirmation of it. If that doesn't happen and the market comes down after a couple of days of doing nothing, okay, and comes down and breaks this green candle and closes like this, right? So the price goes below this price here, okay? We know we are still in a bearish move and we did not find the bottom, or we did not find the right area where we can bounce off, okay? So this is how you read the market, okay? So bullish, bearish, okay? This is the signal for us that everything's pointing into bullish direction. Are we going to buy in right there? No, until we get the confirmation for it. What else I use as far as the trading as a tool, and this is the only tool that I sometimes apply to the chart. You can use it to find these support and resistance levels, okay? The most significant levels on this chart or on this tool, this is called the Fibonacci retracement tool, is 38.2, 50%, and 61.8%. Also 78.6%, but I'm gonna go over that one in some other video. So we have this swing. This is called a swing. The market went from 0 to 100. 0, this is 0, to 100. This is 100, the bottom and the top. Okay, this is why I marked this tool from here to there. All right. Now we are expecting for the market to start coming down and for the price to hit some of these levels. Besides drawing all these lines on the market or finding these support resistance, if you can find a few different things that they can overlap, meaning that Fibonacci tool can overlap with support resistance level that you marked, is even better signal for us to have more confidence that this market is going to bounce off of that level, okay? So if the market comes down from 100 to 38.2 level, okay, and you have the line, which is pretty much close, this one is 22.54, pretty close to that level, okay? And if the market showed us that bulls are here, the tool, or the calculation we use for the market is the 38.2 is the fastest bouncing level. So if the price comes down to 38.2, we have the fastest moving price all the way to the certain level, and I'll show you how far I'm expecting for the market to go once I squeeze the picture there. Okay. The second level, we have a 50% where we are right now. And if you take a look, that we have a red line here. We had this green candle that hit exactly 50% and bounced off of it. Plus, we had this support resistance area, which was confirmed just today, that with the price closing above it, after this green candle was done yesterday, and today we finished with this inside candle, but the price closed above the red line. So this is considered a 50% bounce. Okay, this is the second fastest way of the market moving in the right direction. Okay, so this is how we look at these levels, right? And the third one would be a 61.8 if the market comes to here. Also, this is a bit slower way of the market to recover to a certain level. So now let's take a look at something. So these are the levels where we're expecting for the market to stop, and if it overlaps with any of these lines that we have on the screen, that help us determine these levels to be more significant than the others. And I'm going to show you why this is important for us to know how far the market can go. So let me show you now why is it important for us to find these levels where the market is going to bounce. Okay, Fibonacci tool is actually used in a sense that we find the support resistance areas with it, and also it is known that Fibonacci tool also gives us something that's called extension. Extension means that if the market bounces, in this case right now we have market bouncing at the 50%. Okay, we found it on a chart that 50% pretty much corresponds to this red line that we marked here. The bulls are showing their hand. If they confirm the move, we have something to measure how far the market could go. Okay, and just take a look at this, because I marked these black lines way before. All right, so if the market, and this is how this tool is used, if the market bounces off 61%, 50%, or 38.2%, the market is expected to go. So if the market does this, okay, comes down here, we have 38%, we have 50%, and we have 61.8%. If the market comes to these levels, okay, it's expected when the bulls take over, then market extension is actually above this 100% that we marked from, and the 0% that's here. So if we find the bounce here, or here 50% or 38%, market is expected to perform all the way 1.618%. Okay, 1.618%. Take a look at here. Okay, take a look at here. All right. Also, if you take a look at extensions if we take a look at extensions for a Fibonacci tool, we have extension that's usually 1.25, which is corresponding to this 32.14 area, which is right here. Okay, so that would be the first target for me. All right, if I'm looking at the Fibonacci tool. All right, in my trading experience, I usually look for the target to reach 0 first after the bounce. So that would be my first target. Second target, but according to the Fibonacci tool, that would be the first target here. So so this is the area, it's 1.25. Okay, and then the final, after this whole move, bounce of 32, 50% or 61%, if this proves for the market to be going long or in the bullish move, this is our target. Okay, it's not going to be achieved in one day, but it will eventually come to this level here. Okay, this is our second target. Take a look where I marked this line, and that was a long time ago on my charts. So this would be a next level to look for as far as the trading. So first target, second target, third target. First, second, 3rd. So this is another tool that we can use in our arsenal in order to understand how the trading works. Okay, so some traders actually heavily rely on these kind of tools. I use them really rarely, but in the cases like this, I decided to just show it to you how I would look at it if I would have this tool plotted on my charts. And I'm going to show you once again how that looks like on a screen. Okay, so we mark this tool from 0, which is the bottom, where this move started, to the top of the swing. So this is the swing, this is the move. All right, we calculate from the bottom to the top. We calculate the retracement, and if it corresponds with some of the support and resistance areas that we actually marked before, that's even more confirmation for you to be looking in the certain direction of trading. Okay, so again, if you want to add something to your arsenal, this is called the Fibonacci tool. It's measured from the bottom of the move to the top of the move. We take a look how far the market will bounce, where the bulls come into the play, and if one of these lines here on the Fibonacci tool correspond to the support and resistance area, we know exactly how far it can go. So we can measure that using a Fibonacci tool, right? So you know the market is going to go up if the bulls show their hand, and this proves to be a very significant area, which it is at this point of time. Right, looking at the chart, you know why I marked this red line, and we are seeing bulls coming into play, and we know that it's a 50% Fibonacci retracement. So a lot of things are pointing in the right direction. Anyways, this is how I see the market today. I hope you learned something new. I introduced you to the new tool, which is a Fibonacci tool. So thank you very much for watching the video. If you subscribe to my channel, I really appreciate that. Thank you so much for doing that. That really helps a lot for me to make more videos. I will try to do these kind of on a daily basis because there's not much movement there. I will rather cover more different stocks and you learning the right way of trading instead of just covering one stock constantly and nothing is happening on the chart. So development from yesterday and today is been shown to you on this chart today, and I hope you learned something about a new tool that you can incorporate in your arsenal for trading. Thank you. This was Sasha, and peace out.